Does Ethereum or Solana make sense as an investment?
First of all, the basic rule is that if you don't understand something, don't invest it.
They will be replaced, there will be new ones coming. How do you pick a winner? Awesome. But what is a DeFi protocol? How is Ethereum different? What does it mean to say that a ticket is sold as an NFT? Where is Ethereum in the picture? What is my benefit? What I take away from this is that except for Bitcoin, so all other cryptocurrencies, they are just giving you.
Now, if we come to specific problems that Bitcoin have is basically slow transaction times. So let's indulge in that word. When people saw Bitcoin and its beauty, obviously they thought of, okay, how we can make it better, how we can improve it further as well, right? So that's why like a lot of hard forks happened, first of all on the Bitcoin chain, and then some people saw that, okay, how can I reinvent this whole Bitcoin and what can we do more, right? On top of using this kind of decentralized new way of basically doing things, right? For transaction of money, Bitcoin is there, but we can do more on it. So that's why in 2015 Ethereum was created. So basically, it's a fundamentally initially it was exactly very similar to Bitcoin, but way faster because of like a lot of technological improvements.
When you say technological improvements, can you specify? Because improvements is a judgment. There were technological
Changes, yeah, to make it fast, basically.
Yeah, and that comes with a compromise.
Yeah.
What is the compromise?
So basically, there is always, as you previously mentioned, there is always three diagonals. It's a triangle, right? Decentralization, scalability, and security. Yeah.
So wait, there is speed, there is
security, and then decentralization.
How are security and decentralization different?
Decentralization probably is how easy it is to run your.
Okay, so maintaining copies of nodes makes sense. So one is about
Functioning of
nodes,
network.
one is about mining, and the final one is about transaction layer. Okay, interesting. So yeah, you have security, you have decentralization, and you have speed. And Bitcoin chose rather.
Like basically very light but super secure system with very slow speed.
Yeah.
If you want to increase the speed, you need to and scalability as well. Speed of scalability is same, but if you want to improve the speed and scalability, you need to reduce on some of the decentralization part and some of the security parts, right?
Okay.
So on Ethereum,
what was the compromise that was made?
So on Ethereum, it was not a 100. Like, so basically, you don't see it as a black and white that okay, this is completely not secure. It is more of a lever, right? So basically, on Ethereum, it was like a mixed combined bag where the speed was much more increased. But
so speed is chosen highly. Okay.
Speed was chosen to be much more, and the compromise was on both decentralization and security a little bit.
Okay. So Ethereum is solving for speed.
Yeah.
Why? What is the use case of Ethereum?
Exactly. So Ethereum thinks of cryptocurrency not as cryptocurrency but as tokens.
Explain what you mean.
Yeah. So basically, on Ethereum, you can run something called as smart contracts. So what smart contract is, it's basically your code that you program into the blockchain, which will run on top of blockchain and execute itself. So basically, you can basically program your money on blockchain.
Let me try to use an analogy and tell me if I'm right. Like on the Bitcoin blockchain, the space you have in the middle is for transactions.
Yeah.
In the Ethereum blockchain, the space you have in the middle, you can have transactions, but you can also have smart contracts.
Yes.
And these must be data heavy then. And hence it compromises on decentralization.
Yes.
Because if it is data heavy, not many people will be able to create and maintain a node with them, because they will need a lot of hard disks and stuff.
Yeah.
Correct.
So that thing is there because that complete data of that particular program needs to be on blockchain. Obviously, there are some, you cannot just run your Python files on top of a blockchain, right? So there is a new programming language called I'm forgetting the name. Solidity or something like that.
Okay.
Uh,
The name is not important here.
So basically, you can program in that program language, and there are some methods on how to program smart contracts, so that it needs to be follow some guidelines.
Okay.
There are some requirements so that it is light and don't disrupt the blockchain. So there are some requirements.
Okay.
And there are some functions that is given so that you can use on top of that language.
So Ethereum actually has a native programming language as well.
Yes.
Okay. And then the smart contract, let's say I want to put a smart contract on the Ethereum blockchain. I can put it there, and the space it takes, I will pay a fee proportional to the space it takes. Is that the case?
Yes.
And I will pay the fee in Ethereum. So I will need Ethereum in the first place
Exactly.
to create a smart contract.
Yes.
On Ethereum.
Yes.
And the same, I guess, is true for Solana and other
Yes.
like DeFi.
Exactly.
Okay.
So that's where the concept of DeFi came in, because on blockchain now you can run your code.
Okay. So you can.
It's not just that transactions are happening at fast. It's a complete new ecosystem where you can run code on blockchain, and you can see blockchain as your server, not just a database. A database which you can program yourself and your own things as well. So basically, one smart contract, if that smart contract is sophisticated enough, it can basically, that the DeFi protocols that you see, right? Those are all nothing but smart contracts on blockchain.
What do you mean by DeFi protocols?
DeFi is basically a app, or basically decentralized finance.
Correct. But what is a DeFi protocol?
Sure. So traditionally, we have institutions like banks.
Okay.
Right. Any financial institution, banks, stock market, etc., right?
Correct.
That is traditional. Like in current, you know how it operates, right?
I mean, I don't think any of us really know, but yeah, we have a sense for it.
Yeah, we have a sense. Now, like on blockchain, assume that as your computer, or your servers or your internet, like it is becoming like that only, right? It is not just a layer for transaction. It is becoming more like an you can say like an internet.
Okay.
Like an internet of blockchain, like that.
An internet of what? Of transaction data, of smart contract data,
of data, which is
usually financial in nature.
Exactly. Okay. Which is basically, that's why like we don't call it currency nowadays, more as tokens, because that is nothing but a code for something, and if that is popular, then it becomes a currency. But if it is only built for a specific use case, then it's a token.
So it's just nomenclature, whether you call it currency. If it becomes successful and a lot of people are using it, it rises in value, and hence you call it a currency.
Yeah.
Okay.
So initially, like you can create that's why you can also create your own token on Ethereum or any newer blockchain.
But it will be worthless unless people use it.
Exactly. Unless other people see value in it.
So that's interesting. Yeah, I have the Ethereum blockchain, and I am an entrepreneur. I want to create a token of my own, and there are many people like that, I'm sure.
Yeah.
So they need Ethereum.
You will build it.
Let me finish this thought. They probably need, not probably, they need Ethereum because they need to pay in ETH tokens. So they need to pay in ETH to even have the opportunity to put a smart contract there, and no one knows whether or not anyone will use it or not.
Yeah.
So ETH is being used even to get into this whole smart contract or DeFi business.
Exactly.
Are all other cryptocurrencies like Solana also smart contracts on Ethereum blockchain?
No, they have their own. So Ethereum as a blockchain started in 2015, was like the second blockchain that was popularized because it took the concept of Bitcoin just from being a ledger, financial transactions, to more like an internet events, where the event is happening. It can be financial in nature, it can be non-financial in nature, right? It's like a general purpose.
Can you give me an example of a non-financial use for Ethereum?
NFTs is basically...
But that's true also for Bitcoin. You can have NFTs on Bitcoin. How is Ethereum different? Is it cheaper to have NFTs there?
Yeah, much cheaper. So basically, you can assume Ethereum as a... Already said, as an internet layer, uh, and as an internet, right, a blockchain internet kind of sorts, where you can run your own smart contracts or any digital kind of.
What can I do with these smart contracts?
So basically, the DeFi is the biggest use case. So basically, when people have Bitcoin, what you can do is you can just only send it to each other.
Correct.
Right, nothing else. If you want to do anything else, you would need. There is no trustless method to do anything else.
What do you mean by that?
Trustless method means that when you send a transaction from your own to someone else, it's a peer-to-peer.
Correct.
Right, and it's completely trustless.
Correct.
Right. Now, if you want to exchange something, for example, there are two kind of currencies, right? Assuming that there are two currencies, and you want to, okay, that I will give you 10, you will give me 20.
What two currencies are you talking about?
It can be anything.
So it's not Bitcoin that you're talking about.
No.
It's on the blockchain, on the Bitcoin blockchain, but you are talking about exchanging some other currency on the Bitcoin blockchain, and that is not possible.
So basically, taking a loan, right?
Or taking
in a trustless manner, right? That if you want to take a loan in a trustless manner, and you say that, okay, give me 10 Bitcoin, I have a person, if I send him 10, assuming that is something that if I send him 10, then he will send me 11 back. And that's a surety that you want, that you have. So
you're saying just basically complicated financial agreements.
Any financial transaction agreement which is not just one-way transaction needs some trust or some middle layer.
Correct.
Right?
Like you have banks that handle loans. So you have depositors who put their money into banks, and the banks lend it out to borrowers. And it acts as a mediator.
Exactly. While for Bitcoin wallet, it is completely controlled by you. It is not on some server. It is completely on. So for Bitcoin wallet as well, right? You can just go on the blockchain, create your own account, that which is again powered by open source code. You can again
create your own wallet. Yeah.
Exactly. You can just connect remote connect via your terminal. You don't need any application as well to create and operate your account on Bitcoin.
Correct.
Right. That is completely trustless because you are directly interacting with blockchain. So without any middleware, you cannot do anything apart from transactions.
I'm not sure if that is entirely true of Bitcoin currently, because I think now Bitcoin is allowing more and more complicated financial agreements and arrangements. But I know for a fact that on other cryptocurrencies like Ethereum, like Solana, you can do a lot more.
Yeah. So Ethereum is built for it is built from ground up to be a general purpose chain, right? With the roots of Bitcoin, because that worked, right? And that method works.
But it changed the trilemma. It went from being decentralized and
it is still decentralized very much.
It went from the trade-off of focusing on decentralization and security to focusing mostly on scalability and speed.
Yeah.
Okay.
Yeah.
So it's not the same.
It's not the same.
It has very different. It is based on similar technology.
Yeah.
But different
it was derived from similar, but it was a very general. It is a very general purpose chain where you can transact digital goods, where you can run your code on it, smart contracts, and you can do like a lot more and you just need a token for it to do, and that token can represent anything.
Okay, so I can run different tokens on Ethereum. This much is true.
And each token does not only represent a currency, but it can represent anything. Some tokens represent NFT, right? That is one thing. So some tokens are unique. So basically, when you say that my NFT is one of one, that means there is only one of that, right? And that is, so basically the minimum number of that you can break blockchain into is satoshis, right? Bitcoin into.
In Bitcoin, yeah, satoshis. 100 that is million. The minimum. For now, that can be changed, by the way.
But that can be changed, but that currently it is some satoshis. That is the minimum number. Like that is a root level. For example, we are built up of atoms, nucleus. So that is the lowest
unit.
Correct. Exactly. So in NFT, if you just program it because it is yours, right? You can program it anything. if you just program it to be the minimum unit is 1, and 1 include this token, and this token represents this smart contract, and that smart contract is the NFT.
I don't understand.
So basically, you created a token which is 1 in number.
There's a single token, and it's not divisible.
And it is not divisible.
Okay.
And it is only 1 in number.
Okay.
Right. So that means you have one token which is only 1, right?
Yeah, there's one token. Yeah. Okay. There's a single unit of a token.
There is a new token which has a volume of 1.
Yeah, correct. Next.
Right. Now what you can do is on Ethereum, you can link that token to a smart contract, and you can program whatever you want to offer. For example, if someone has that particular NFT, they will have some membership in the real world.
How is the token relevant?
Token is never relevant.
So why did you use token in the example?
Because token is the unit that is used by blockchain.
But can I create
for
a smart
blockchain? It is a
without
token.
a token?
No.
Why not?
No. So if you have a token, you can use Ethereum, like the root level token, that is the ETH.
Let's talk about a smart contract where there's an NFT, okay? And there's ownership of the NFT.
What is an NFT? NFT is just a token.
Non-fungible token, correct?
Yeah.
So I'm getting confused with the... Asa, in your example, do you mean that the single token that there is, let's say you call it Vishal. The name of the token is Vishal. So you go to Ethereum, you create a smart contract where there's a Vishal token, a single Vishal token, and that is your NFT. That token itself is your non-fungible token. What is the point of it?
Now that is a unique thing. That again, jewelry, that is one unique thing, right?
So if you can market it.
Exactly. So now blockchain gives you power to create unique things. Now it is on your creativity what you want to do with it.
Okay, it's a bit like
enabling. It's an enabler. Ethereum as a chain is an enabler. You can do. So basically, there was a token. So basically, someone created some NFTs that if you have that particular NFT, you would be able to. So basically, tickets are sold as NFTs. That is the single most.
Tickets to what?
Tickets to any event.
Let's say there's a concert.
Yeah.
What does it mean to say that a ticket is sold as an NFT?
That your wallet, your Ethereum wallet, will have that token. And the number is 1. So your wallet will have Bitcoin. So
I'm a normal consumer. I'm not into Bitcoin. I'm not into Ethereum. I have nothing. I have rupees. Okay. I want to go to a Diljit Dosanjh concert. Diljit is coming to Bangalore. The price of the ticket is 10,000 rupees. Okay. How is Ethereum coming into the picture? I book my show 10,000 rupees, and I get a ticket and I go to the concert. Where is Ethereum in the picture?
So now again, there needs to be some intermediary which converts fiat to crypto, but
fiat being rupees in this case.
Fiat being rupees, right?
Okay.
But apart from that, if you have some money in your wallet, assuming like fundamentally if you have some money in your wallet.
Some money in your wallet, then what money are you talking about?
Any kind of money.
Rupee.
Rupee is not supported. It's not a cryptocurrency yet.
So you're talking about crypto money.
Crypto money.
Okay.
Right. Because cryptocurrency is only possible. You cannot trade fiat, unlike USDT or USDC. There is rupee.
Someone gives you their cryptocurrency in exchange for regular fiat money. That's what happens. But rupees and other currencies themselves are not on a blockchain.
Yeah, you need some middleware.
You need someone who's willing to exchange, basically.
So, for example, if you have a Bitcoin, so now you have a wallet, Ethereum wallet,
but I don't. In my example, I have rupees.
Okay. Now you go to your friend, you create a Ethereum wallet with zero balance.
I don't create. I buy my ticket for Diljit's concert on Book My Show. I never touched Ethereum. But you say that tickets are being sold through Ethereum. How is Ethereum in the picture?
So not Book My Show is doing it.
Book My Show is doing it.
Not Book My Show. Book My Show is not doing it through Ethereum.
Okay. But who is doing it then?
There are a lot of companies which are...
Name one.
Ticket my something like that, right?
Let's say there's a ticket my company.
Let's so basically what it's doing is it's releasing tickets that okay, that there are 10,000 tickets for this particular event. They will create a new token which will represent that particular event's tickets.
So the price of each one token equals one ticket. And the price of the token will determine the price of the ticket. So I can buy the token. Let's say you have the token, you bought it from them directly because you have crypto. I don't have crypto. So I can go to you, I can say, hey, how much are you selling that token for? And they can be like an open market. And people are exchanging.
Exactly.
Okay. But this is complicated because right now when I go to book my show, I have a fixed ticket price. But if you have an open market, you will have variable ticket price.
Book my show is the seller. So here when I bought the ticket, I paid a fixed price.
Okay, so this is the secondary market. It's not a primary market.
There is a primary market, which is basically the person who minted the tokens or created the tokens in the first place will obviously sell it to the public, right? So basically, if I am the event organizer, what I do is I create a token, I create a supply that, okay, these are only 20,000 of it will be created.
Awesome. Okay, continue.
Right. I create a token and I say, because I have the credentials to be the organizer of this event, I can say that, okay, this particular token will act as tickets to entry for that particular event. Now, what I do is I create a supply. Everyone can see the supply. Right? That is the biggest thing. How many tickets are there, right?
That is honest.
Right. So I can see the supply and you can just create a smart contract that if someone pays me that particular X amount of Ethereum, send them that particular NFT in their wallet. That is why a smart contract is there.
Okay.
So that code is running on blockchain, so it cannot be hacked.
Okay.
So if that how that smart contract will work is, it will have power to a wallet, right? That is only created for that smart contract. Each smart contract have a wallet where it stores NFTs. So what happens is, if some transaction goes into that wallet, basically the smart contract controls the wallet with some code.
Yeah, there's a code running.
Right? Now, if some transaction goes into that wallet, now what it does is, if that transaction is in, first of all, it will check that if it is multiples of that particular amount of one ticket, right? Otherwise it will reject it.
And the money will go back to the original sender. Okay, so it has to be a particular amount because the ticket is priced.
Exactly. So first thing is that,
correct,
if someone sends in 10, what it does is, because the code is on blockchain and everyone can see the code as well and say that, okay, the code is legit, then we are able to trust it, right? Send the money in that particular
multiples of that amount. Correct.
And then it will just send back to that many particular NFTs.
And that it doesn't have to be ETH, it can be USDT.
Yeah.
Because if it is ETH,
because
the seller of the token is exposed to the price of ETH. But if it is USDT, they get a dollar value which is more stable.
Exactly. And how you will, if you have only ETH, how you will convert that to a dollar? Because there is another smart contract running parallelly, which if you send it as ETH, then whatever based on the price, it will send you USDT.
Based on the market price.
Yes.
In the real world, the blockchain world, there is a smart contract running that is already connected to the real world.
No, it's not connected. I'll tell you how they do it. It's called an automated market maker.
How does that work?
I will explain. So basically what it does is, let's see what happens and then go in depth. Now, for the smart contract, if you, for example, if you want to buy a ticket, then if the company wants the users to enable that, okay, you can pay in any cryptocurrency, what we'll do is it will connect those smart contracts in a way we write code. So we have building blocks. So any good DeFi platform will have hundreds of smart contracts.
Correct.
And they are connected in a way that any simple thing that you want to do and take action is very easy. But beneath it, hundreds of smart contracts are lined up and used.
It's like how running an e-com website, a simple e-com website, has become easy because now you have payment gateway that you can plug in.
Exactly.
You have checkout mechanisms that you can plug in. You have listing mechanisms that you can plug in. So good blockchain, a good DeFi blockchain is one that
Good
there's
DeFi
a lot
platform.
of good DeFi platform has a lot of. What's the difference between platform and blockchain?
It is running on ETH, right? Because ETH enables users to create your own smart contracts.
But the smart contracts are all on the blockchain, right?
Yes.
So why did you correct me? Why did you say blockchain is wrong and platform is right?
Because each
Okay, we're
smart
not
contract is
talking
not
about
a
ETH
different.
itself. We're not talking about ETH
Haan.
itself. We're talking about different things built on the ETH blockchain.
Yes.
So then ETH acts as a platform rather than a simple blockchain of its own.
No
Okay.
one uses ETH. ETH is like internet. People uses things built on top of ETH. For example, for the ticketing provider, assuming let's talk about a simple feature that you can pay with any kind of cryptocurrency that you have in your wallet. Now, you see that 1000 rupees, I have a rupee cryptocurrency in my wallet, assuming that is the first assumption we are making. Assuming I have a rupee, so it will say 1000 rupees, I have 1000 rupees, more than 1000, so I will say okay, rupees, so I will pay in rupees. In backend, what happens is, first of all, that because you selected the option in rupees, it will go to a rupee smart contract, converts that rupees into ETH, probably something basically ETH, and then that will again trigger another smart contract which will give NFT to your account, right? Something you can use combinations of smart contract to give any kind of functionality, just like when you build a web app or any kind of application. That's why it is not just a blockchain, it is a complete platform which can enable you to use blockchain tech at its fullest in a completely trustless manner. Now, because everyone can see the complete code,
It's honest.
it's completely honest. That app cannot scam you.
Make My Trip, you can end up downloading a fake version, or they can go bust or something.
They can go bust on anything, but assuming that Make My Trip is not honest.
Yeah.
But people are honest, like
But
generally.
it's possible.
But yeah, for example, if Make My Trip is not honest, what it will do is it will just take your payment and not give you
the ticket. Yeah.
Right. But it does not happen because of
Regulations and
exactly
reputation.
like we can it is specifically because of game theory. But we can talk about that later as well. But in blockchain there is no requirement, so assume that in real world the probability is 99% that the person is trusted. In blockchain it is 100% because there is no need of trust to do anything. It is just the regular consensus of people that you can check that okay, it is correct or not.
Yeah,
it is like
working, whether
completely transparent.
All this is amazing. This is the first time, by the way, I could make sense of any crypto but Bitcoin. But the question I come to is, to me, this is now a tech company. All these cryptocurrencies are tech companies that are trying to solve for financial problems, let's say. Okay, whether it's ticketing, whether it's some sort of transaction, whether it's loaning, whether it's some transfer of some kind. Okay, great. So, and the way they try to do it is they try to make it easier or cheaper or faster to do it. All that is great. It's ridiculous to me that these cryptocurrencies are then compared with Bitcoin, because when we started talking, you said that Bitcoin was built and then people realized that there are some improvements that can be made, so they made changes. What they ended up doing, from what I understand, these changes, what they ended up doing is Bitcoin was built with a particular vision, and I'll get to that later. These changes have completely transformed, and I'm not saying it's a bad transformation. I'm saying there is possible utility to having trustless transactions from anywhere in the world to anywhere else in the world. Right now, if I want to buy a ticket for a concert in Europe, I will have to transfer my money through some banking system. I'll pay a commission on exchange rate, some or the other complications. You can now argue that actually traditional cards have also stopped taking commission. Like I have a Scapia credit card and it doesn't take a commission. But still, I get that there is a use case for this.
There's a lot of middle parties that are involved.
That's fine, but it still works.
It works.
It still works.
It should work, right?
The traditional system still works. The question I come to is, if I am Diljit, I am Diljit Dosanjh, I have a concert. why would I opt for your blockchain solution for my ticketing instead of a traditional solution? What is my benefit?
Okay, so first of all, for you, it is a service that you are getting right now as well and later as well. So you will continue to get the same service, right? But the only difference is that now the service that you will be getting is basically trustless service.
Why should I care? I'm getting my money anyway.
True. That is basically like the most compelling argument that people make, that okay, everything is so right now also everything works.
Yeah.
What is broken? First of all, when a new tech comes, so right now the system is completely bloated, right? There you need for anything that you want to do, there are some multiple third parties that are involved in between.
But that's also true for the blockchain. There are multiple smart contracts that are pulled in at different times.
Yes, yes. Obviously, but that smart contract is not a third party, right?
It is essentially a third party. It is essentially a different bit of code within that blockchain, and every step.
But that is native code, right?
Whether it's native or not, the point is that because every transaction requires or pulls in different smart contracts, you will pay a small fee for using each smart contract. I'm guessing, is that true? Is that true? Yeah. So this is also then on some level a replication of the traditional system, maybe with lower fees and with trustlessness added on top.
So first of all, the scale is completely different. I would see it as more of a internet thing. For example, whenever you do any web action, right, there are multiple parties involved, and instead of seeing it as multiple services, for example, when you open Google, first of all the web is loading, so you will make an API call, and then multiple digital services are being triggered and run. So when you do a Google search, first of all you will send that particular signal to your cell service, and then it will go to a different service, Google data centers, and then they will process it and return it to you, right? You can see it that is the complete internet, right?
Correct.
Now on blockchain, each smart contract acts as a building block.
So it's all native.
It's all completely native, and you don't need any layers of it. So it is super efficient.
And so efficiency is the only gain then. Efficiency and trustlessness.
Yeah.
Okay. So it is cheaper and more reliable than the traditional system.
Yeah.
That is it.
Yeah.
Nothing else.
Again, probably it is much cheaper. It is much cheaper, first of all, and it is much more. You can do a lot more. It is completely native and built into that blockchain that you can do any kind of transactions.
But you can do anything. A lot with traditional system as well. You can come up with interesting agreements between parties, which if you look at corporate agreements, or if you look at...
But that is being upheld by judiciary, right?
Okay, so this is being upheld by code. So the trustlessness.
Exactly, that is completely native. It will happen. So think of, there is no need of judiciary.
So essentially, all that crypto is adding, all that altcoins, any altcoin adds on
blockchains,
top of...
I want to refer, and so basically in Ethereum you see no one uses ETH. Everyone uses whatever they are comfortable in using, whatever they have. What ETH, the value of ETH is that it runs the system.
So there is a small amount of ETH that is paid or that is needed to use any of that space.
Any of the smart contracts, that's how ETH makes the money, and
that's why ETH has value.
That's why it has value. That everyone needs that oil, and that's why it is because it is spent. Correct. It is not reserved. It is always bought to be spent.
Okay.
You need ETH to run your system on blockchain, and that is your way of giving tax to that blockchain, because that is on top of blockchain your all systems are running.
Okay.
Right. That's why I always say it as an internet, not as a reserve of currency or something. It is a digital internet of sorts.
So each blockchain, each platform has its native currency, like each country has its native currency, and to transact within that blockchain, to do things within that blockchain, you need that currency. Just like to transact within a country, you need their currency.
Exactly.
I'll give you my very honest take on this. What I take away from this is that, except for Bitcoin, so all other cryptocurrencies, they are just giving you efficiency gains and the trustlessness aspect. So you can do things cheaper and you can do
First of
things
all,
without relying on third parties.
First of all, is that you can do things. That aspect itself is so big that you can do things on blockchain.
Okay, I'll add a third one. So there are three things that the blockchain is giving you. You can do things that maybe you can't in the traditional system. You can do them cheaper and faster. And you don't need a judiciary to uphold the rules.
Yeah,
it's
because
upheld by
is
code.
rule. It is upheld by code.
Correct.
That anyone can see.
Okay, fair enough. None of this competes with what Bitcoin has to offer.
Exactly.
Bitcoin is a league apart then.
Yeah, it is not. So when you say that Bitcoin is a blockchain and Ethereum is a blockchain, they are not meant to compete with each other. First of all,
a lot of people
they
do
every so you can think of it as products, right? You can think of it as products. So banking system, so Swift banking system is an international payments between countries and international payments. You use Swift, right, between international banks. Versus UPI, they both are not meant to compete with each other. They are different. So basically they both are products which attempt at different use cases. I see it as that way. Bitcoin is for a different use case. Ethereum is of a different use case. But because both are financial tokens that can be bought and sold, people have an option to choose that, okay, should I invest my money in Bitcoin and or should I invest my money in Ethereum? So the competition is which will give more returns, not that they are both in terms of value are competing with each other. They are competing in the minds of investors.
Good. That's a very good phrasing.
Yeah. But not as products.
You've explained very well what the use case of other cryptocurrencies are, or other blockchains or platforms are. What is the use case according to you for Bitcoin?
First of all, like that analogy I really like, that you can see it as a digital countries, right? Countries. So each blockchain acts like its own country, and then to transact between countries, that is each blockchain, Ethereum, Solana. Now Solana is again a newer iteration. That means that it will have more features. Again, Solana is like one blockchain that has come like closer to solve, like getting the balance between all three much better because of tech, because of better tech.
The balance getting right. So what is the right balance would depend on the use case you're going for.
Exactly.
If the use case is to bring together these different digital countries, so to speak, together and to be able to like interact with them and transact among them, that would have a very different balance for the three.
Yeah.
Compared to when something is basically trying balance, to be the money of the future.
What is the right balance for your use case?
Correct.
Exactly. That is more. So Ethereum again like is a right balance. That's why it is working. Solana is also working because it has some balance. It has the right balance, and technologically because it was later, people have time to study the previous blockchains, what went right, what went wrong, and yeah. So overall, again like so for Solana, like they use a different programming language called Rust, which is very low level and very efficient. Basically, like people, I don't know why, but a lot of tech people really praise it. That okay, that's a really good programming language.
When you say efficient, what does it mean? It probably means that it takes up less space.
Yeah,
and hence,
and like fundamentally using that language will be difficult to code or something, but it will make up more efficient smart contracts, which will keep up less space, and you can process them easily.
So it will be cheaper to build a smart contract on Solana.
Yeah. Also, these blockchains, because they are internet, that proof of work does not suit them. That to keep the blockchain running, you should, because they focus on efficiency, you should require as less compute as possible to keep the security requirement, right? Because it's a internet,
and should keep the compute less to keep the speed going, because it's all about speed and efficiency.
Because
now.
The function is that you would, so to keep your, because for Ethereum you can see that okay, we have a system which is Ethereum, which is a decentralized system, enough decentralized system. Now to run it, a lot of people are using a lot of compute.
Correct.
Which makes, again, the same thing comes, same as Bitcoin, that price of Ethereum needs to go up because it is using work and it is halving as well, and it is fixed supply, right?
So Ethereum and Solana have fixed supply. Okay.
So Ethereum's price needs to go up so that it becomes profitable for people to work in, so that it becomes a decentralized. And if it is not profitable to mine Ethereum, then no one will do it, and
Correct.
the decentralized part will go.
Correct.
Right? It needs to be profitable. To keep it profitable, the price should go up.
Correct.
Right?
Okay, so that's the logic.
What they want is, they want the price to be as low so that running your apps on Ethereum,
running the smart contract is cheap.
Is cheaper.
So there are opposite forces on the price.
Exactly.
From the side of the miners and the investors, you want price to be high. But from the side of those who are actually building stuff on Ethereum, on Solana, you want the price to be low.
Yeah.
And if I believe that, let's say Solana is the future, I would want to buy as many as possible when the price is low, so I can later use it to build out my smart contracts and do things on there.
Yeah. And what they want is, because people should be able to do it as cheaply as possible, the gas price for each interaction with blockchain.
What is gas price?
That is the price you pay for each block mined.
What is gas? Can you?
Yeah, basically that is a term. Basically, whenever you do a transaction, there is some fee that is deducted.
Like a mining fee.
The mining fee, that is called the gas price. It's the same.
Okay.
Yeah.
Okay.
So gas price, that's a technical term. It is called gas price. It is the same as mining price or anything else. So you want it to be as low as possible, because again, like if you see any digital company running, there is a huge cost of running your servers. In any Web3 company, there is a huge cost of running. That same digital servers cost goes to blockchain, because they are not running their own servers. Their servers are run by Ethereum miners. Exactly. So what happens is that they need to pay that gas price for each of the interaction, and if there 1,000 people are using them, so the number of interaction they are using the blockchain are 100k. Now for 100k, what is the price that they need to pay? You would choose a blockchain where the price is as low as possible,
and it has all the right functionality.
Exactly, with all the right functionality, and the gas price need to be as low as possible, and the speed should be high, because those are not your transactions, those are your smart contracts talking with each other. If there is a workflow where there are 10 smart contracts, and then the thing gets done, it would take 20 minutes to do a simple step on your phone, right? Think of it as like this. That's why I called it internet, not monetary system.
Given all this, does Ethereum or Solana make sense as an investment?
Okay, from an investment point of view, first of all, if you want to make an investment into any Ethereum or Solana, but fundamentally you would think that, okay, the value of Solana will grow.
Why would I think that?
Because otherwise, how would you invest in Solana?
Acha, if I believe that it will grow, that's why I will invest. But does it make sense to believe that the value of Solana will grow? Because there's always a downward pressure on the price.
No. So the downward pressure, the downward pressure is baked at the start.
What do you mean?
What I mean is that the blockchain is so efficient, so that the mining rewards that you will get are based on the money that you put in. So basically, there is no mining now. It is completely shifted to proof of stake.
Okay.
So basically, proof of stake means...
So all the Solana has already been mined?
No.
Or they just stopped mining?
There never was any mining.
Okay.
The consensus mechanism was completely different. Instead
so
of...
there's a fixed number of Solana coins, tokens.
It is exactly the same. But the way you do... So basically now there are two parties involved, right? And it is, instead of proof of work, there is still the same functionality going on, but instead of people completing and finding a shard, what they are doing is...
What is a shard?
Finding that token, the number. the block
Acha, the cryptographic.
cryptographic token, right?
So
That
it's
is
like proof
for
of
each-
work then.
But instead of doing that computational, the algorithm that they have created is such that it is not, it requires some fixed energy. It is not exponentially in nature, that if
Okay.
more people join in, that exponentially the block reward is the same. So those mechanisms are there, but the cost does not go exponentially. It is a fixed number to maintain servers.
But there can't be a block reward if there is no mining.
Right. So what happens is the block reward is given to people who put money. So basically, the voting power is based on how much tokens each account has staked.
I don't understand.
Okay.
If you said that Solana has no mining, is that true?
No, it is just true. There is no mining, but there is a way that you would still need to add new blocks, right?
But you don't get a block reward.
No, it is a completely different system. Which
So
they
why would I
devised.
add a new block? What is my incentive to add a new block?
That's what I'm coming to, right? Now, to add a new block, you don't need to run your computer or something, right? What you need to do is, if you have some Solana, if you have bought some Solana, you need to stake it.
What does
Now
staking mean?
there are two types of Solana tokens. First is Solana, normal Solana, which is like oil, which runs the Solana economy, right? The second is staked Solana,
Okay.
and you can convert between each other.
Okay.
Staked Solana is like equity in the system.
Is it a one-on-one conversion?
It is some conversion, which is
Which one is more
which
valuable?
is basically which is determined by an algorithm. Again,
Just a question. When I buy Solana on an exchange, let's say I go to Binance and I buy some Solana, will I get a normal Solana or a staked Solana?
you will always get it a normal Solana. It is a different token.
Okay. So the staked
But you
Solana
can
is not
convert-
movable.
You can convert it to a normal Solana as well.
Will I get
What is the ratio
equal
that you are
units?
saying?
Yeah, what is the units I will get?
The ratio is determined by some algorithm.
On what
It
basis?
is on the basis of market movements. So basically, if more people are buying staked Solana, then it will go up in price.
Why would someone buy staked Solana versus normal Solana?
So normal Solana acts as an oil. Staked Solana acts as equity in the Solana ecosystem, because staked Solana gives you voting powers. It is same as owning Bitcoin. It
So
is
it
same
should
as
always
so
be more
basically one-
valuable, right?
Yeah.
It should always be more valuable because it is Solana as well, but it is also equity.
It is a different token,
Okay.
but you can convert it easily, and there is always the market
Okay.
changes based on how many people want to buy staked Solana. Is there value in that? And if there is no value in that, people will go to normal Solana.
What is the use for staked Solana? It is voting.
It is voting and basically equity in the system. So in Bitcoin, if you have 100 flops of compute power, you would have some equity in the system.
That's a very rough analogy, but let's flow with it.
Here, it is the staked Solana. A ratio of staked Solana you have with other people. That is the equity that you have. So staked Solana acts as shares of Solana.
And the people who stake it, they get to decide whether the new block is right or wrong.
I will come to that system.
Okay.
Now you have staked Solana, but we'll do it. Why? What is the value? Now, for staked Solana, if you stake it, so basically you need to stake it so that you cannot spend it. It is basically locked.
Yeah.
Right? So if you stake it on that Solana platform or wherever you go to stake it, that Solana goes into a smart contract, and you will start getting interest on that.
Okay, so that's how you make money. You own the token, you stake the token,
and you start getting interest on it.
And when you stake the token is now part of all stake tokens. So let's say there are 100 tokens. I have one, I staked it. My token is 1% of the total staked supply.
Exactly.
So whatever interest or whatever fees are being generated, I get 1% of all fees.
Exactly.
Okay, that's the mechanism.
Yeah. And now, so what all the fees are being generated, there is some cut that is given. So there is a different name. It is not miners exactly, right? Given to people who are running the servers.
What
there is
servers?
a different. Again, it's Solana. right? It is a blockchain.
So people are
Different
running the
people are
blockchain.
running.
So their incentive is their cut.
Yeah.
And what is the...
So basically, assume there are three numbers, right? First is the interest rate. Second number is the rewards that are going to people who are maintaining servers, and third is basically the total fees that they are getting. Right? It's a very delicate balance.
total fees who is getting?
Solana is generating from all the transactions.
So let me just... Total fees is the bigger number, and that is divided between those who stake and those who maintain the
Yes.
server.
Yes.
Okay. How is it divided?
So first of all, again, an algorithm, right? It is not a fixed number.
Okay.
It is based on, like, it is basically, first of all, it is not something which is a fixed code, right? It is based on demand and supply.
Okay.
Right? If people are investing more and more in Solana and staking it and getting equity, then the interest rate will go down. It's like economics, right? When you see government bonds, like in the normal traditional system, you invest in government bonds, then you have stock market, which is riskier but high returns. But when you have but you have high interest rate, you invest in government bonds, right? So it's again a balance. Now in Solana, that balance is pre-coded. That if you have more people coming in and putting money in
Staking.
the interest rates go down.
Because there is only so much interest to distribute. So if you have to distribute amongst more staked coins, each coin will get less.
Exactly.
Or each coin holder will get less.
So, and if the platform is generating more gas fee, that means the platform is getting used by more users. That means interest rate gets high. That means the equity value grows high as well.
Repeat this.
So, and then there is some cut taken by server people. So assume that as some cut.
Yeah, there's some cut for the server people, some cut for the stakers.
No, stakers will get everything, but the cut is taken by the server people, which is fixed price.
Is it fixed?
It sort of works like a fixed price.
Okay.
Right, some percentage, fixed percentage, which does not move much with market demands. Assuming that is constant.
Okay.
Because that is not much always, right? Because that it is so efficient that the total money that is being generated can be distributed among the investors without any cost of infrastructure.
When you say investors, you mean stakers?
Yeah, stakers.
Okay.
That is basically the people who are holding equity.
Yeah.
Right?
The stakers.
So in equation, you would want to make the system so efficient so that if you want your miners to make money, their investment should be as low as possible. You should get highest platform performance for each compute they do, right?
And when you say miners, you mean the people who are maintaining servers?
Yes, maintaining servers, miners.
Let's call them miners. The equivalent to miners in the system.
Yeah. So the people who are miners, there needs to be some reward, and that reward again works same as Bitcoin, so that for them there is no difference between mining Solana or mining Bitcoin, because they need to use their GPUs. But the difference comes in the rewards. For example, if Solana has a lot of miners but there is no gas fee being generated, the rewards go down. So there would be less miners, right? For example, if the system has some bandwidth, so if Solana has some bandwidth because there are a lot of miners, but there is no people on the network doing using it, then the rewards will be very less.
Then mining incentive is low.
It's low, so people will lose it. So there is balance between the bandwidth, the people who are using it, and the investors, right? So investors will stake their tokens and get interest rate, and that interest is the revenue generated by the gas fees on the platform, and the bandwidth of the platform is governed by the miners. Now, if there are a lot of people using it and the bandwidth is very low, now the reward for the miners increase and the stakers reduce.
Correct.
So that miners come in, increase the bandwidth, so that people. So that's
it's
how
automatically balanced, just like Bitcoin.
Yeah, exactly.
Just like Bitcoin, the incentive structure plays out.
Exactly. So
I go back to my original question. Does it make sense to invest in anything but Bitcoin?
So now you have to think about your hypothesis about the future. It is basically exactly as predicting the future,
Okay.
right?
All investing is predicting the future.
Exactly. So now if your hypothesis is that whatever use case Solana is solving, is it useful for the world? Or the world will, is that good product so that the world will use Solana
Okay.
to do its digital actions,
Okay. Let's say that's true.
right?
Let's say in 10 years, all financial transactions happen on Solana. What then?
Now you need to buy Solana and stake it,
Why?
because that will give you the maximum reward.
Why?
Because first of all, basically, if you want to profit from anything, any kind of company, right, you buy their shares,
Correct.
right? Here it is the same. You will buy
Okay.
shares of Solana. By staking it, you get equity in that network.
So whenever people buy a cryptocurrency, whenever an informed investor buys a cryptocurrency, they are essentially buying shares into that company's
That network.
that network. Yeah,
Yes.
correct. My problem with this, and this is why I also don't do stock picking for the most part. There is one stock I've bought, and that's also a Bitcoin stock. But my problem with trying to pick a winner is there will be no winner. There is always disruption. There is always a new company that will find a way to do it more cheaply, more efficiently, more quickly. And in this space, especially because it's so young, it's even harder, I feel, to pick a winner. Maybe in the technological space, in traditional technological space, and it's funny to think of AI as traditional technology, but in AI, it would be slightly easier, at least that's what I feel, to have 3 or 4 companies that you can be reasonably sure are going to emerge as one of the winners. Like right now,
Because you are sure that their use case will be a use case after a few years. And
actually, I'm not sure. If I'm being
adoption.
completely honest, I'm not sure.
But
And that's my
for the
problem
most
with
part.
stock picking.
Yeah,
You can't be sure.
You can't be sure, right? I see. So basically, I see the world in product categories, right? Use case categories, product categories, markets. Web3 is a market as a different market is, right? So for me, I see it as that, and I think it is important that you know the use case as well, but there is adoption. So for Web3 to get adopted, I think that's where the government part plays in. Because, okay, it is trustless, it is really good, but if you adopt it, the biggest downside is with government.
Why?
Because then because of the tech, right? Because any traditional tech that you see is controllable by people who program it, right? So if you government controls all people. Government has the power to control every person and any human, assuming.
I don't completely agree with that.
Assuming that is the power, right? Now, in any traditional company which is there, right, they will buy some. So it is basically every system that it creates is being controlled by some people in that company. So the government can just control that company, and through that control the people who are using that product or any service.
It can influence, let's say.
Influence or control, basically.
Influence is a softer, better word.
It is a more practical word, right?
Yeah.
Now, with blockchain, even if you control that company, you absolutely have no power to control the network.
So are you saying that the code on which, let's say, Solana is based cannot be changed even by the creators of Solana?
No. They can be changed by a voting.
By consensus.
By the people who hold staked Solana.
Who is the distribution of the stake? Is it really decentralized? Is it really fair? Or is it concentrated with the owners, the creators, because that's the criticism I hear with most other cryptocurrencies, that the distribution is not really wide enough, not fair enough.
That works exactly as any public company works on the stock market. So if a company is public, right, so there you can see the parallels between a blockchain which is small versus a public blockchain, right? It works, this is an analogy, right, with good blockchains versus new blockchains. They are same as investing in a startup versus investing in a public company which is traded on stock market. There are lot more oversights by people because they have to disclose a lot of things, standard forms, if you are a public company, right, traded on stock market. Similarly, if a company is far more mature, people can see through both of those companies like 100% by default. Here you cannot see anything, but there is some analogy that as a company, if it is a startup, no one will know that how that startup is functioning, right? You cannot.
There's a degree to this, and of course public companies, there's more transparency.
Exactly,
correct.
In blockchain, it works a similar way. The new blockchains, like because you created that blockchain, all the tokens are in your wallet or your company's wallet or a wallet that is controlled by the company with some framework, but it is controlled by the company because because that company know what is the blockchain use case, and the company will influence it, and for that it needs their tokens.
So it's not entirely trustless then. Instead of trusting the traditional system, you're trusting the creator of this token.
Yeah.
So it's not trustless.
Again, now as the person who has created the blockchain with some vision is somewhat successful and going towards it, he will invite more people to come and like basically distribute more and more and more of the tokens
of his share
and dilute it, and then it goes truly public, where it is like the owners have nothing, the people have nothing, and with the test of time it has a very balanced structure where everyone owns everything, and no one has the concentration of power, and it is very transparent, and the systems and framework of guiding that company is also very transparent.
I see.
So that's why blockchains like Ethereum and Solana and a few more are like placed higher, because they have matured into those blockchains as compared to other blockchains which might have more features but currently closed, and you will only invest in them as much you are investing as angel in a startup.
So the question I have now is, for Ethereum and Solana, the two biggest
those are public
outside
blockchains.
of
You can call
Bitcoin.
them public blockchains. Solana is much more centralized on the degree.
What percentage?
There is
this should be transparent.
This is transparent. There is always some percentage which the company discloses that okay, our company, as a company, we have this account, and this account holds this much because.
And what is that number?
I don't know.
You don't know.
I have to check the latest.
That's fine.
But yeah, those much is like basically the people who the investors basically who have staked those tokens, they need to know that much, right? So
precisely
that information is given out.
So for Ethereum and Solana, you say that
those are, Ethereum is like, you can assume that is a completely public blockchain.
Okay, so the distribution is
quite with some power with the Ethereum team, because everyone in the community and trusts them that okay, these people are not someone who can be influenced.
No, if there is trust involved, then I don't trust it.
There is. Again,
it has to be purely trustless.
But okay, so if you say that there is 2% power with the Ethereum team,
if they can't change the code with 2%,
no, they cannot.
Then it's
they
fine.
Would need.
Then
but again, like it is not as someone that okay, they have 50%. They have. That's why I'm saying that they have some power.
The ballpark is around 2%.
Very less, not 2%. I have to again check what is that. But they have very less, and they have their followers. They have their in the community. They have their followers. Okay, who trust them, and with that, again they can I propose changes that okay, this is the changes, and the community and the people who are involved in the blockchain sees it, and then says that the same thing that you said in for the Bitcoin case, where if some people, there were some side forks as well, soft forks, right?
Soft forks,
That
hard
works,
forks.
yeah. Soft forks are the main honest chain, right? So now when there are some soft and hard forks proposed in Ethereum, those are proposed by uh, people from Ethereum team and public as well, and they are discussed in the community, debated, and there is a forum and everything. And over some years, some decisions are taken, like few years ahead, that okay, in 5 years down the line, this is a decision that we need to make, and people discuss for years, and just like a democracy, some decisions are taken and
I see.
implemented.
It's not very dissimilar from Bitcoin. The difference is in Bitcoin there is no team, there is only people.
Yeah.
But
So
if
you
the
can,
power is really less, if it's not concentrated with the team, and if people can choose to do something that the team doesn't agree with,
they can do as well.
if that is true, then that's
No,
fair
they,
enough.
they can do if people come together and say that we want to do this and everyone agrees, then they do. But because here with Ethereum, what happens is the law of game theory, which works in traditional world, is in favor of them, that people trust them, and because they created this and it works so well, that they trust them, and their decisions regularly have reinforced them, okay, that they are the good guys, and
Fair
etc.
enough.
But and also the trustlessness that they give, that okay, if you don't like us, you can replace us, but so far people are liking them as well.
Okay.
So both are in good, going good, like, because we have seen a lot of crashes, still like no one has done any shady work.
Fair enough. I see what you mean. I'm still going back to the original question. Even in a world with these blockchains, these public blockchains, you call it, as the basis for all financial transactions that happen between people and smart contracts and all of that, they are basically tech companies,
Yeah.
right? Operating digital countries, operating like cryptographic digital countries. They will be replaced, there will be new ones coming. How do you pick a winner? It's like picking the next big stock. How do you know?
Same.
So it is gambling.
Same as, no, it is not gambling, it is same as stock investing.
No, I'm comparing it to the stock market.
Yeah,
so I'm
same.
taking the crypto world and comparing it to the stock
It
world.
is the same.
It is an informed guess, it is a hunch, it is a hype, it is
Like there are, so basically when you invest in stock markets, there is a method to it, right? But when you're investing in cryptocurrency, which blockchain, etc., there is a method to it as well, right? And it is not exactly the same, because the nature of, because of the nature of things.
Yeah.
But it is exactly the same, and fundamentally it comes down. So in a, when you pick a stock, you see that okay, what the filings are, right? What the documents that they have made public, okay, what is the PE ratio, etc., 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 how the company is well run, who are the CEOs, and how the team is, how is the work culture, etc.
what is the track record?
Exactly, how good their products are doing in the market. So there are multiple, and the same, the fundamental, what the fundamentally check in those each pillar is applicable in the crypto world as well, but the nature is very different, right? Here you don't see the PE ratio as well. Here you show what is the balance between all those three different things that we discussed previously, like what is the mining ratio, rewards, what is the, how good are the mining rewards, are people actually mining, what is the staked, what is the volume of the staked, and how much is the, like how many new buyers are coming in, because this whole data is public.
Correct.
So you can do a very much in-depth analysis, which increase the transparency, and which basically if you do all that analysis, then you would, it is far more easier to pick a winner as compared to in the stock market, because there are a lot of things which you don't have data for. In the blockchain world, there is a method. If you follow that method, you will pick a good winner, because if you see that balance and what the team is doing, and you see, because all the data is public, so there are, so if you think that any blockchain that comes, like why should, there is no reason for trust, right? So what happens is people look at the whole thing, that that they check in traditional world, plus what they check is all of this. So if you combine both of them, and both of them are correct, then people like trust you, and then like the value keeps increasing, and people have so far trusted like Bitcoin is like the base fundamental trust.
Let's not even talk about Bitcoin now.
Right.
Let's
so
talk
like
about
in
other
terms of the
things.
trust factor, it is far more easier to trust Bitcoin.
Yeah.
And then when you go in depth and learn more about the space, then you trust Ethereum, right? And so basically the trust level. So Bitcoin has the highest trust level, and in terms of how many people are trusting, then it comes Ethereum, and then comes other blockchains. I don't want to name because there is some considerable difference, right? So
Whatever you said, I agree. I accept that you have more visibility in cryptocurrencies compared to stock markets.
but the use
Let's
case
talk
as
about
well
stock
are
markets
different.
still, right? You have all these possibilities to analyze, to compare, to do this, to do that. The fact remains, and I don't know the exact number, but let's stick with 95% for now. 95% of professional money managers, people who have been trained to do this, people who are paid to do this, don't beat a passive index fund. 95% of professional money
And what
managers.
is that passive index fund?
Like Nifty 50, like S&P 500, that is basically tracking the biggest companies just based on size and not trying to pick winners or losers, right?
Basically a general average, market average.
Weighted average.
Weighted average.
Correct.
Yeah.
What this tells me is that the enterprise of trying to pick winners is not something that you can actually get good on. So this is going back to behavioral economics. You must have heard of Thinking Fast and Slow by Daniel Kahneman. It's a very famous book, right? Daniel Kahneman had an argument with a different professor because Daniel Kahneman always said that he believes that you can't get good at things in a certain way, and the other professor was like, no, there is something like expertise and you can get good at things. And then they worked together, and what they realized is that there are some fields or there are some activities where you can get better, and some where it's just unpredictable and it's you can't get better. Like playing tennis is an activity that you can get better in, but picking stocks turns out is one of those things that data tells you that you actually, no matter how much you analyze, no matter what you do, you are not getting better at it. It is mostly luck then.
Yeah.
Okay. If that is true for the stock market, I have an assumption that that is also true for cryptocurrencies, because cryptocurrencies, as I said, are basically tech companies as well. They are building tech platforms. It's just on a different nature, as you said. So if I can't pick winners in the stock market, how is just that bit of additional data helping me pick winners in the crypto market? And if that is the case, is there mathematical evidence for this? Like there is evidence that you can't pick winners on the stock market. Has there been research on whether it is possible to pick winners in the crypto market?
Okay. It's a really good question. I've never thought about picking winners in a crypto space, because like people are picking winners. With meme coins and etc. etc.
Let's not even talk about meme coins. That is pure gambling.
That is pure gambling. You can say penny stock level area of crypto, right?
Yeah. Actually, that's a good analogy.
Yeah. So that is there. They can give you high returns, but are as volatile. While good companies, public companies like Ethereum, Solana, and ADA, etc., are like a mid-size or large IPOs, while the biggest thing remains Bitcoin.
Bitcoin is like the index fund of the stock market, the equivalent.
And also it acts as an index fund, because if Bitcoin goes up, all the other crypto
because it's driven by sentiment.
Yeah, driven by sentiment as well. Yeah. Because also like a lot of crypto companies, like as part of their treasury, holds a lot of Bitcoin.
Correct. Because even they know the true value lies in Bitcoin.
Exactly. So as part of their treasury, to maintain and do operations, they hold Bitcoin, right? So that is there as well. And the funding amount and all the money, all the basically money that they made goes converted into Bitcoin. And the fundamental, basically, like just like how a treasury is maintained by a country with gold, a reserve bank, right, to fluctuate currencies, right, what assets it's part of, right, they maintain Bitcoin as well in the treasury, so that there is some inherent value in if they basically want to say that okay, if there is an inherent value in my token, they will buy some X amount of Bitcoin, and the ratio will be the value of the new token, right? Because
I don't understand this math.
so basically, if your treasury has 10 Bitcoins,
Correct.
and if you publish or mint 100 tokens saying that each token is an equity of that treasury,
Okay, then
right? Then you can. So
then your
that,
token's price is pegged to Bitcoin.
exactly, it's pegged. Sometimes that pegging is dynamic, sometimes it's static, etc. Right? So, and then there are some
How is it
balancing rules,
dynamic?
etc. Dynamic means that the amount of Bitcoin in the treasury is linked to another smart contracts.
Okay, so you can just play around with
Play
things.
around with
Yeah,
things, right?
okay.
Because that is the power that these new age blockchains give you, that power to put code on blockchain so that you can play around and program things.
I come back to my original question.
Again, yeah.
Given what you said right now, I feel even more reinforced to ask this question. Why does it make sense to invest in any crypto instead of Bitcoin?
Only because if you want higher returns than Bitcoin.
But that's gambling. That's like picking a penny stock. So if you are if you're a long-term investor, you know that Bitcoin is the way to go. But if you want to try and make a quick buck, you can try to get into
not
crypto.
a quick buck, for the long term as well, right? Because for example, like if an investor, what do you call an investor who has picked Apple over ETF, over an for example an index fund?
I would call him lucky.
And what if he trusts Apple, that okay, Apple is a good company, like in 70s 80s, that okay, there is a new company which I really like and I feel confident that okay, this will go up. If you have that conviction, then only if you will buy it, right? And that's a bet, that's a gamble. So
and it works out with Apple.
If it works out with Apple,
it worked out with Apple for many people.
For many people, it worked out with Apple.
Yeah.
Now it's the same case, right?
But that's the thing. You can have that conviction for a company and then it won't work out. And that's what numbers tell you. Most times, when you have conviction, when you do your research, when you understand, when you believe there is value, you believe in the management team, it still doesn't work out. Rarely it works out. So it makes me lean towards luck as being the primary reason rather than some inherent ability to pick the right company. I'm sure there is some ability, I'm sure there is some sense making to do there, but in the end, most times you do the sense making and you're still wrong. It means that luck is important.
Yeah, true.
So luck the same is true for cryptocurrencies.
Obviously it is true for cryptocurrencies. It's a dynamic market where anyone can come and do things which will affect other people. Precisely. Right. So it is luck again. Like if a person is doing right things, everything right, then still you don't know that that particular blockchain will survive or not, right? Everyone is getting new ideas and they are building them and testing them if it is useful or not. Things which are useful are like going up. If you think like that particular thing is useful, then only you invest. Otherwise, if you, first of all, the basic rule is that if you don't understand something, don't invest it.
That is also my rule. I agree with that.
So first of all is that. So like the ladder which I climbed is like basically you get to know about what is blockchain and cryptocurrencies and that whole thing. Then you go and understand how Bitcoin works and what is Bitcoin and what is its history. You understand that, and then there is a question that okay, Bitcoin I know. Now I feel that there could be some improvements which people might have thought in Bitcoin, because Bitcoin is completely open and they can study everything in Bitcoin.
Correct.
So then they do that and some things worked.
Correct.
Right? Let's just say that word. Some things, they turned out multiple ideas, some things worked. Now you understand that particular new idea. Okay, you say that okay, this is good. Then so that it's a rabbit hole.
So it's a bet. You make a bet on something based on your understanding.
Yeah, based on like how your understanding keeps increasing with time.
Okay.
Any sector that you go in, because then the risk-taking appetite also goes up. Like that unlocks. It is your choice that you can take it or not. But if you understand the sector in depth, you can still choose to take a bet on the easiest stock, which is the biggest company in that particular sector, or you can just choose the lowest company, because now the only thing that increases understanding is that your knowledge of that particular company, that okay, this company also exists and the risk is very high as well, and you can take a decision with all the numbers in favor of, like, in front of you, not thinking that okay, I know that it is a 99% risk, but if that the reward is also that much big.
I think we should wrap this up. I'll just make one more point. We'll talk about Bitcoin in depth next time.
Yeah.
I don't completely agree with the company analogy that there is a sector and there are multiple companies, and the biggest company is equivalent to Bitcoin and the smaller companies are equivalent to other, let's say, cryptocurrencies.
No, there is not a sector, right? It is different use cases inside blockchain world as well.
But
so Bitcoin acts as, I would say, gold. That is the analogy that I am most comfortable, and which I think like has worked out like for me over last few years, that Bitcoin acts as like a gold in the world.
That's your understanding. We'll talk about it next
the
time.
other companies works as oil, which runs the world, and then there are some other small niche things.
Now I ask you a question based on your understanding of it. 100 years ago, if you could buy gold or if you could buy oil, you had, let's say, 1 rupee or $1, and you could either buy gold with $1 or buy oil with $1. What would you buy?
I would buy gold.
Precisely.
Yeah.
Thank you. This has been a good conversation.
Yeah.